Welcome back to Bazaar Morning Call. Well, for the market at the moment, it is very quiet, really. Not too much happening at the moment, just holding on to levels from yesterday. Let's continue to put focus on the Jio Financial price discovery and its demerger from Reliance. We have two gentlemen joining in. Abizer, Diwanji, the partner and national leader of financial services at EVA India, and Ashvin Parekh, the managing partner at Ashvin Parekh Advisory Services. Gentlemen, morning to both of you. Abizer, let me start with you. What is the larger implication of Jio Financial Services entry into the industry? I mean, there are a lot of discussions, a lot of narratives on whether this will be disruptive for the industry or not, but it may be too soon to take that call. Your view?
No, absolutely too soon to take that call. But Reliance as a group has been disruptive in most businesses they have entered. We've seen that in retail. We've seen that in Petrochem itself. But we've also seen that now. We will possibly see that now in financial services. The one thing that they do well, and I think they will leverage that well, is on the digital part of things. And really, the world of financial services is headed more towards digital lending. And if Jio is able to leverage their existing digital information and convert that into credit information, which I think they will initially be able to do, because the Reliance ecosystem itself is so large that they will be able to start lending at that. But once they do that and thereafter focus on the larger market and build a analytics database around it, I think Jio will be a disruptor in the financial services industry. The other important thing for them to note is that they have the capital. 1,25,000 crores of capital is available, which generally NBFCs lack. So, yes.
No, I take your point. I take your point that, they have this existing digital infrastructure which they can leverage easily. And of course, they will do that, going by what they've done in the past with other businesses. But there are a lot of challenges in valuing a company that has a high net worth, but no significant book or present business, right? So they start with, of course, 1 lakh crores. But what can you what is the prognosis on how they could grow?
So at the moment, I don't think anybody should value it more than the 1 lakh crores or 1,25,000 crores that it has. There's no question. But what will happen? The market will factor in some level of, as the market looks forward, the market would value it at some level of book price, to say maybe 1.5 times book initially, and then see the first 6 months, 8 months as to how the trajectory happens. And if the trajectory is going to come about, then the multiple to book will be larger. I mean, Bajaj Finance is 8 times to 10 times book today. So if there is a trajectory felt that the digital story is playing out and is disrupting the way it is supposed to disrupt, I think there is a big play there. And the market will value it upfront. But not to the extent of a Bajaj Finance, clearly. And it should not.
Okay, all right. Abizer, I request you to just stay with us for a bit. We have Mr. Ashvin Parekh as well, who's joining us on the show. Hi, Mr. Parekh. Good morning. Tell us, what could the implications be for the financial space with the entry of a player with a very, very good parentage?
Yes, CC, I'll tell you, there are 2 or 3 things in financial services which are distinctly different, compared to the other industries. One is, of course, the size of the balance sheet. If you're working with a very large size of balance sheet, you can aspire to become a financial conglomerate. With the exception of perhaps a banking license, you could end up doing anything. So that was one. Second is the disruption that you're talking about. Let's say there are different phases of disruption. It's not just disruption. We all agree that in financial services, cost of acquisition is perhaps the most difficult to tackle for a new entrant. Now, in case of Jio, let's say what they have. They already have a huge bandwidth. So payments is something they can really work on. They have customers, so they can really work on the customers, on customer finance segment of, let's say, the financial services. They can really go into insurance eventually. So when it comes to what it can possibly do, I suppose, with a balance sheet size of that nature, I suppose they can look at all segments eventually in a span of a certain period. And they can certainly look at all services except banking, and when the regulations change, then they can even look at that. Now, let me say, in addition to the cost of, let's say, acquisition of customers, there is another important cost, and that cost is to ride over the markets, let's say, during the first 3 or 4 or 5 years. If you expand your book, and then if you find that there is an economic downturn, then it does become a little difficult. So I would say I would wait and watch. I wouldn't take a bet on how much of, let's say, the valuation would be, or I'll wait for the plans. I'll see what are the sectors in which they are getting into. What is the potential, in those areas. And when it comes to disruption, everything essential for disruption, customer base, technology, acquisition of customers, most important, trust. The brand is, it can bring about a lot of trust, which is so essential in financial services. So I would certainly believe that I would wait for the plans, to be disclosed. As and when they come out with the plans. And then some of the multiples that you talk about, in the financial services at a higher level, that is at the holding company level, they are a function of what they get into. Insurance has a certain set of, life has a certain set of multiples. Same way, lending is a different set of, payments is a different environment altogether, basically.
All right, guys, just want to get our rates. I think the pre-open is just closed. So on the BSE and the NSE, I think those are the rates. The 2589, that's 250 rupees adjusted. And on the other exchange, it's 2580. I think this is the rate that we have got on both the exchanges. So that just closed, I think, in 945 baht. And we've got the rates that come up for you on the screen. So it's a larger than expected number, right?
Yeah, larger than expected, because it was up to about, the estimates generally range from between 160 or 200. But this is, I think, the rates which are now finally starting to come through. So the session, the window to put in trades, modify trades, that ended at 9:45, and 9:45 to 9:55. The rest of the stuff will happen at the back end. But I think this is the rate now, which basically means that the discovered price, now the found price, the discovered price for the Reliance Ex-Jio Financial is 2589. Yesterday's close was 2842. Which essentially means that Jio Financial Services will be included on the Nifty at 251 rupees per share. And the price will be fixed on the NSE and, of course, the other exchange at the rate that you're seeing, 251 and 261, 262, for the period till when the entity actually lists, Jio Financial actually lists on the exchanges at a future date. So this is how this is going to happen. Trading, you won't be able to buy and sell Jio Financial Services because it's just being included, not quoted on the indices. But Reliance will be available to buy and sell from this price, 2580, from 10 o'clock. And the change will be calculated on this base price, not yesterday's closing price. But the price that you're seeing on Reliance right now will be the base price. And if it opens up, it'll be calculated. The base will be 2589 on one exchange and around about there on the other exchange as well. Slight difference there on both the NSE and the BSE. But this is what is coming through in terms of this price discovery that we are getting at this point in time. Gentlemen, good morning. Mr. Parekh, if I can come to you. Just in terms of thinking about what Reliance will do with the financial services entity, I guess we'll hear more about it in the AGM as well, which is not very far away now. But they're not a group which does things at a small scale, right? Telecom is a recent example. As an advisor, if you were to let your thoughts run a little while, not too wild, what should we expect really? Should we expect some M&A, some acquisitions, especially in spaces like insurance, where there are companies where perhaps those opportunities exist? What else? Lending, of course, is the big money-making part of it. Go on.
So with the balance sheet size of that, your question is so pertinent, so relevant. You see, what would you really want to do? Would you like to really build, things by pieces, or would you like to run as soon as you land? If you want to run as soon as you land, then I suppose acquisitions will make sense. But there are enough number of, let's say, opportunities available in general health, even in mutual fund, in AMC industry. So there are those pieces available. And then as far as, let's say, the other areas are concerned, let's say for payments or acquisition of fintechs, basically, and also becoming a substantially large fintech itself, should not be a big challenge for. So I would certainly expect in the span of next 1 year, a certain order of acquisition, M&A activity, and a certain number of. The only thing they would do is, I suppose, not only will they acquire, but they will allow the management of that organization to run it for a certain period with the geo characteristics. So that could make it a more interesting place.
Okay, that's interesting. And they have put a very strong management in place as well, right, for JFS. But Abizer, I wanted you to come in on this because as Mr. Parekh was also pointing out, they have all the ingredients for success, right? Whether it's the customer base, whether it's technology, whether it's digital infrastructure. But an analyst earlier was pointing out that they will have to go through that grind in terms of a timeline because there are well-entrenched players, not just Bajaj Finance, but others as well in this space. So it may take them at least 2 to 3 years to sort of put a proper business model in place. What are you looking at in terms of a timeline, despite all that they have currently?
Oh, I absolutely agree with you. See, for one, they have the capital. And capital, as everybody else knows, can be wasted quite easily in financial services. So I don't think one should be wasting capital immediately. They have 2 or 3 things to do. First is, look at the Reliance ecosystem per se. The whole bunch of suppliers who are MSMEs who are sitting at the Reliance level, where they can easily give them credit because they've been experiencing them for the last many years. The second is the whole retail proposition with Reliance Retail around to offer consumer credit. The third is to actually look at payments. And I mean payments is a much larger investment space, because when you start doing payments, you start collecting characteristics of people which talk about how they behave in terms of payments. And when you capture those, you actually will convert a lot of payments data to credit data. And I think if they do a 3-year or 4-year systematic data collection process, which enables them on a focused way to convert data into credit data, I think at the end of 3 years, they will be ready for the market at large. And it's the payment vehicle which will enable them, whether it's the payment bank or the aggregator, will enable them to actually build a larger customer base, which is more credit-worthy. Insurance will be a cross-sell product for them, clearly, whether they manufacture or whether they broker. But at least I think the wise way would be to start with something that you're familiar with. Once you gain scale over a period of 1 to 3 years internally, go external. And at that point in time, possibly also look at acquisitions. Acquisitions has to be a means to an end. It can't be an end in itself. And I think that's what the group realizes very well. So I don't think they need advice from people like us. But that's, I think, what they...
That's very modest of you, Abizer. Thank you very much for joining us. Mr. Parekh, great to have you with us here. And we'll sort of lean on you for more in terms of insights, in terms of what you make out of the journey here with regards to Jio Financial Services. The capital market journey in some sense is, the journey's already started and the process is underway in terms of Reliance building out this financial services entity. Now, for our viewers, at 10 o'clock, you'll be able to trade Reliance Industries Ex-Jio Financial Services. So remember that. And the base price, as we've been saying, is 25.80. There you go. That's the change, which is coming up on your screen. And, the difference between 25.80 and 26.42, which was yesterday's price, is basically the value for 28.42, beg your pardon, is the value for Jio Financial Services, which will be included but not quoted, will not be tradable on the indices starting 10 o'clock. The F&O contracts for Reliance Industries will also start trading at 10. So just a bunch of things to keep in mind, all of this coming through in the next 5 or 6 minutes of trade.